Finally, ISA 210, remember this was a level 3 for your psycho knowledge. And all that this is actually discussing what needs to sit in the engagement letter and the fact that there should be an engagement letter which needs to be signed by both parties, which needs to include the auditor's responsibility. It needs to include management's responsibilities, and both need to accept and agree on the terms. Okay, just note here that if it is a recurring engagement, changes need to be agreed. You don't necessarily have to re-sign an engagement letter, although we highly recommend it because of the fact that there are always going to be changes, whether it be just purely in the audit team, whether it be in management's responsibilities. So it's always important to have an engagement letter. So guys, this standard, the auditor's responsibility, we've already seen what our objective is in terms of ISA 200. So obviously our responsibility is to express an opinion. And we know that from ISA 200, if we want to express an opinion, we have to use our professional skepticism, professional judgment, comply with the ISAs, comply with the ethical requirements, and get sufficient audit evidence for that opinion. Okay, management's responsibility is also sitting in ISA 200. Management have to prepare the financial statements according to the framework that they have chosen. So, in your case, guys, it will be IFRS because you have to know IFRS for accounting. So, I can't expect it to be another one which you guys don't actually study. They're going to prepare it according to IFRS, all IFRS's requirements for the balances and transactions. And then, in doing so, they are also responsible for internal control, ensuring that the company has got sufficient internal control, and providing us as the auditors with all info that we need, that they use to prepare the financials. Anything else we request? And finally, access to any persons that we need access to. So debtors, creditors, if we need them, banks, to get confirmation of amounts, they need to give us that access. So guys, not too important, I'm just letting you know the responsibilities. The most important thing about this standard is the fact that there always must be an engagement letter, at least from your side. There must always be an engagement letter. And then the details of the engagement letter, just in case they ever give you an engagement letter with errors and ask you to critique it, you've got an engagement letter in Appendix 1 which will help you to ensure that that engagement letter lines up with what's supposed to be there, or you can pick up the errors because it differs so significantly from the example. So I'm not going to go through ISA 210 with you because the entire standard is just breaking down the engagement letter. I would rather just work through the example with you, the Appendix 1, so you can see the very crucial points of what needs to be in the engagement letter. So if you ever tested on that, you can check, are these points there? No problem. Yes, no problem. Okay, so let's go have a look there. ISA 210, agreeing the terms of the engagement. Once again, scope, objective, requirements, I've highlighted all of them, and then obviously the application for each of those requirements. Guys, you do need to go look at that, and I have highlighted the specific sections, especially your preconditions for the audit. But for me, the focus is going to be on Appendix 1, an example of the engagement letter. So I want you to go open that appendix, We're going to work through what needs to be included so that if you get an engagement letter that doesn't have the necessary information, you know what to look out for. Okay, so this is the appendix, guys, and the rest of the standard is really dealing with the details of this. We're just going to deal with how it needs to be structured. So it needs to be addressed to the appropriate representation of management. So we're thinking here the board of directors or the CEO or the audit committee. Okay. The objective and the scope is then discussed next. So they need to include what the audit is about. So they need to stipulate it's going to be on statement of financial position for the specific date, statement of changes in equity and of comprehensive income, cash flows, and the notes. Okay, then we confirm our acceptance of this by means of this letter. Hugely important, we are obtaining reasonable assurance. They will probably say we are to certify the financials. That's a problem. We get reasonable assurance that they're free from material misstatements. Not all misstatements, but from material misstatements. And it's very important that this says it is our opinion, not that this is the truth. Okay. We need to also include the fact that we cannot guarantee that we won't detect material misstatements, but we will conduct it in accordance with the ISAs, and if we don't detect them through our conduct according to the ISAs, we don't really have a risk because we've done what we're supposed to do. Okay, then we will conduct it in accordance with the ISAs. Guys, remember, ISA 200 said we had to get sufficient appropriate audit evidence, comply with ethical requirements, professional judgment, professional skepticism, and comply with the ISAs. It didn't say, and the Companies Act, and the CPC, and the APA, so be careful, because often they like to say we will do it according to all of those legislations. Those legislations will be included in the work we do in determining whether the financials are free, but we aren't doing our audits in accordance with those. It's these standards that tell us how we do our audit. Okay, then we need to explain that they must do and set up internal control, but we will not express an opinion on that. Often they say we will express an opinion, and we're not. We are there to express an opinion on the financials, but we can provide them with a report on whether the controls are working or not. And only the controls we have tested. We'll evaluate the accounting policies, and we will consider their going concern assumptions. Very NB, this paragraph needs to be included, guys, and this is something you must be very aware of. There are inherent limitations in performing an audit. We just discussed them in ISA 200. There's estimates that they use to prepare their financials. There's estimates that we use to consider whether we're comfortable with it, that there's sufficient audit evidence. We use samples. We make our own conclusions. So there are limitations, and therefore there is an unavoidable risk that some material misstatements will not be detected. Okay, even though we comply with the ISAs. Then management's responsibility, very important. They need to prepare the financials in accordance with IFRS. They need to implement internal control, and they need to provide us with access to information used to prepare the financials, anything else we request, and any persons within that entity that we want to get access to. Okay, then we say to them, we might need written confirmations. It's important that we tell them here, because there are specific areas in which we need their confirmation, or we need something from them. And if they don't give us that, we have a scope limitation. Then we'll put in a fee arrangement, but not an actual fee, because we can't guarantee that this will take this many hours at this rate. So just an arrangement to determine how we will calculate that fee. Then we need to ask them to sign as acknowledging they're in agreement. So it's not just about saying please sign, It needs to explain what signing means. And then there needs to be the space for them to sign. Okay, so nice and simple, that's what's got to be in the engagement letter. The only other thing I want to just address here, guys, is if you are auditing a group of companies, in which case you will also have a consolidated set of financial statements that need to be audited. So just to be aware that the group auditors, so whoever is in charge of the holding company and auditing that consolidation, will now have to apply ISA 220 in terms of acceptance and continuance, and ensuring that there is an engagement letter in terms of ISA 210 to the audit of those consolidated financial statements. Okay, so we don't just leave it now as the individual companies. We've got to consider in terms of the group. From ISA 220, do we have the staff with the necessary capabilities, competencies? Do we have the time? Can we comply with the ethical requirements in terms of who is going to be on the group audit and who the client is, to see if there's any conflicts there? Management integrity, or the integrity of the client. That still needs to be considered now. And if we were previously employed, whether there were any significant matters. In terms of 210, there needs to be an engagement letter for the group audit now. Okay, so just applying it on a bigger scale, but it still needs to be applied. So in summary, before you accept or continue an engagement, this is the process we need to follow. We need to look at the integrity of the owners. We need to consider whether our staff can take on this engagement. Are they competent, capable? Do we have sufficient resources and sufficient team members? Do we have enough time? All of those considerations. Do they have knowledge of the industry? Do they have any expertise? Or do we have the ability to get experts where we need them? Can we all, as an audit team, comply with the ethical requirements? Those 5 fundamental principles, as well as independence. Then some of our business factors. Is there a vacancy and can they pay the fee? Looking at their financial information. And finally, is there a signed engagement letter? So a nice 6-step approach. These are the things I must consider. You will never get a theory question like this. You are going to have to apply all of these to the information in the question to pick up where there are concerns, and or if the question isn't focused on the negatives and just says, have they complied with the standard, picking up all the elements that link back to these points. So that's why it's very important to understand the different examples of management integrity lacking, the different examples of the things we've got to consider for our staff being competent and capable with sufficient time, the different examples of those ethical requirements, because you are going to have to go and find them in a question. So let's do this question. Class example 2, you can find it in your class example document after the lecture slides. Guys, it's out of 9, so you will have 3 minutes reading time and 13 minutes writing time. Please try and stick to that and then refer back for any guidance.